Do you ever feel like your paycheck or your retirement income just disappears the moment it hits your bank account? Well, you're not alone, and taxes are a big reason why. So, in today's video, I'm going to show you how taxes really work using no jargon and no fluff. Just simple explanations about where your money is going, how understanding this can help you keep more of it. I'm Christian Klassen, owner of a retirement planning firm, and I created this channel to help you make the most out of retirement. Let's start with one of the biggest misunderstandings, which is around the tax brackets themselves, also known as your marginal tax rate. Let's say you're a single person, you're making $80,000 a year. Well, this puts you in the 22% tax bracket. Now, most people would assume you're going to pay 22% of 80,000, but that's not quite how it works. Our tax system is what's called progressive, meaning different portions of your income are taxed at different rates. So here's how it actually works using the 2025 single filer brackets. This means you'll pay 10% on the first $11,925 of your income. Then anything over that amount, up to $48,475, is taxed at the 12% rate. Anything above that, all the way up to $80,000, is taxed at the 22% rate. So if you make $80,000, only the income above that certain threshold is taxed at 22%. Everything below that is getting taxed at lower rates. So when you add this all up, your total tax bill is closer to 12,000, which makes your total tax rate, when you add it all together, closer to 15% instead of 22% in this example. So the next time you hear somebody say, I don't want to earn more because I'll get pushed into a higher tax bracket and lose money, no, this is simply not true, because every extra dollar you make is still worth more, even if it's taxed a little bit higher. Now, understanding taxes is just one piece of the puzzle when it comes to retiring. So if you're asking yourself questions like, am I saving enough? Or how much do I need to retire? I have a free quiz linked in the description below to help answer these questions. And the answers, they might surprise you. Now let's discuss two things you may have heard of but often get mixed up, and that's tax deductions versus tax credits. A tax deduction lowers the amount of income you're taxed on. So if you make $80,000 and receive a $2,000 deduction, you are only taxed on $78,000 of income. Now, there are two types of deductions. First, there's the standard deduction, which almost 90% of Americans use, and it's a set dollar amount determined by the IRS. So depending on your filing status, if you're single, married filing jointly, or a head of household, you have a set limit to the amount of income you can deduct. And if you want to see what those limits are for 2025, check this video right here. But there's also what's called an itemized deduction, which is used in the case that you're deducting things like mortgage interest or charitable deductions. But the only reason you'd want to take advantage of an itemized deduction is if you're deducting more than the standard deduction limit. Now, there are also what's called above the line deductions, such as contributions to a traditional 401k or IRA. And these accounts can also reduce your taxable income even if you use the standard deduction. Now, a tax credit, that works a little differently. A tax credit lowers your tax bill dollar for dollar. So if you owe $11,000 in taxes and are eligible for a $2,000 credit, now that amount is subtracted and you only owe $9,000 in taxes. An example of this is the child tax credit, which lowers your taxes for each qualified child under the age of 17. So to summarize, both tax deductions and credits reduce your tax bill, but in two very different ways. A tax deduction lowers the amount of taxable income being taxed, while a tax credit reduces the overall taxes you pay. And at the end of the day, taxes are something you can plan for. And the more you know how they operate, the more money you can have working for you. So if you'd like to discover additional strategies to minimize taxes, both now and in retirement, such as Roth conversions, watch this video here. And if you're curious to see the new tax deductions and credits that affect retirees, watch here. Thanks for watching, and I'll see you in the next video.